Well, on this relatively quiet day, there was some major economic news. Not from Australia, but from our biggest trading partner. Earlier this year, China set a goal for its economy to grow by 5%. And surprise, surprise, the Chinese government made sure that happened. Its December quarter GDP ended up rising by a solid 5.4% compared to the previous year. Now, a large part of that was China throwing the kitchen sink at its economy. So that's why Chinese authorities cut interest rates and went on a spending spree in the last few months to prop up its gloomy consumers and struggling property sector. On top of that, 9.5 million babies were born in China last year, which was a noticeable increase, as more parents tried to make sure their kid was born during the auspicious Year of the Dragon. But that didn't stop its overall population from shrinking for its third year in a row, which means fewer Chinese consumers to buy things from us, which isn't good for our economy. Now, putting aside those concerning trends, there are some early signs that Australia's trade with other nations is starting to diversify, with China now buying a third of all Australian exports in the past year, down from its peak of 43%. Meanwhile, the share market ended its day slightly lower, with the All Ords down 0.1%. And it was the banks which were the biggest drags on the market, while some lithium stocks did well. Now, overseas, it was a mixed bag, with slight losses for US and Japanese markets and small gains for Hong Kong and Shanghai. While gold was steady and the price of oil and iron ore rose, the Aussie dollar is still sitting around 62 US cents. And that's finance.